Peter, you have been one of the most accurate forecasters I've seen in recent times. In March of 2009, you called the bottom of the stock market to the day. Just recently, you called the top for silver at 50 and the bottom at 32. I wanted to get your perspective on gold. We were up as high as 1780 today. We're down considerably since then. Do you think we'll see 2000 by the end of the year?
Well, early this morning, after coming back from Europe, I put out a commentary to my readers, and I guess it could be viewed as good news and maybe not the best of news. And the good news part, I had spoken in recent weeks that my long-standing target of 2,000 for gold, which I had since gold was under 500, that I was raising it to 2350. A lot of work that I did suggested that was now more of a likely target than the 2,000 gold that I've had for several years. However, I also noted, because of the great movement we had and some technical work, that I was lowering just a bit my suggested exposure to gold. I have been as high as suggesting 50% of one's total portfolio allocation be to gold itself, and felt that gold had been and would continue to be the single best investment, and certainly better than stocks and bonds. I took that down a notch because I believe, from a valuation standpoint and some technical work, that we were overextended here going into today's trading. Now, if we did catch a bottom in the stock market today, it would not surprise me, and as I wrote again early this morning to my readers, that we could walk in and see a $50 or $100 down day in gold. But don't let what inevitably will happen again, if we have that, the constant cries of a gold top or a gold bubble by the people who've been wrong for hundreds, if not thousands of dollars, throw you off. That would just be a consolidation and some profit taking in a market now that looks like it's finally getting to what many of us suspected it could, and that is where it really gets more somewhat parabolic. And so I guess my response to you is still very constructive towards gold. It's not cheap anymore, as I said it, but I still believe now that it can even go higher than I once thought before. But we're overextended here for the very short period, and some profit-taking and consolidation would actually be healthy, and certainly I would welcome it.
Talking to James Turk the other day, and he thinks we'll see 8,000 by the time the bull market has run its course. Do you have a long-term target on gold?
Well, yes, I just raised it from 2,000 to 2,350. I was just with Jim. We just spoke at the same conference in London over this past weekend. Jim is actually a believer, I do believe, that he believes the Dow will eventually equal the gold price, or vice versa, that there'll be one for one. One thing I've said, and I said it this weekend in some recent interviews, that what was once called the crazies, the people that talk about 3,000 or 5,000 or even 8,000 gold, suddenly isn't that crazy anymore. In the last couple of days even, we've had major so-called regular type investment houses start to really ratchet up their price potential for gold. Jim Sinclair, who I think is probably one of the most accurate forecasters, even noted at our conference this past weekend that a close above, which I don't think we got to today, I think we closed below 1764, I believe that was his number, would set us up for a parabolic rise, that we can go up $500 or even $1,000 in a relatively short period of time. What I just think right now would be best, not markets don't normally do what we think is best, but I do think that with a belief that the Dow at least bottomed short term here after the close Tuesday, we could see some consolidation, even perhaps a little bit of a sharp correction in gold for a few days to maybe a couple weeks.
Since the S&P announcement, silver hasn't responded as favorable as gold has. Gold is up $23 today, but silver is down about $1.50. What's going on with silver?
Well, sometimes when I talk as I'm about to talk, it seems to maybe make some of the real bugs a little bit upset at me, that they feel I'm not as aggressive as I should be, particularly when silver is concerned. There have been times, most recently within the last year, when I have felt that silver could outperform gold. but I've always kept, even during those period of times, that at the end of the day, the real hard big money would seek out gold as an alternative monetary tool before it would silver. And silver, although there's clearly a great argument that the amount of above ground silver is not as much as people would like us to believe, and that there could actually be a shortage fairly soon, still takes, at least in my book, a secondary role towards gold. Now, there's nothing wrong with that, and it is quite useful, but it doesn't have the same big dollar monetary seeking safety reasons that gold gives. Now, there are others that think differently about that. Eric Sprott, who I spoke with at a conference in Europe this past week, is a very, very big silver bug, and he suspects that silver will even outperform gold. But I think what happens is, and what's happened in recent days, is the speculative, more of quantity versus quality is what drives silver, and those type of players had more exposure in the stock market and probably took profits out of their silver in order to, pay for other things that they were losing in, and yet they kept gold as a hardcore holding. So I don't think there's anything wrong with silver, but I haven't felt that it could outperform gold here, and see no reason to think so unless it really sold off and gold didn't, and then from a valuation standpoint, I could possibly place it back in the lead again. But for now, I think it's gold first and silver second.
Let's talk about the shares for a moment. The mining stocks are not tracking gold higher like you would expect, with gold breaking new all-time highs, especially the juniors. People are becoming more risk adverse, it seems, and the markets have the feeling like they did in 2008. I was reading one of your recent posts on Grandich.com, and you said, and I quote, "While it appears the baby is being thrown out with the bathwater when it comes to mining shares, the overall great performance of many of the physical metals has made most mining and many exploration plays the most compelling ever in my 27 years in and around Wall Street." End quote. Now that's a bold statement. Why do you think the shares are such a great buy here?
Well, the second part of it, and I appreciate that quote, but the follow-up, the next paragraph, was a notation by me that I have basically got egg on my face, and my peers too, but they may not mention it as I was, that the expectation certainly was that by this time, based on that great performance in the metals, the mining shares and exploration stocks should have been a lot higher, was anticipated to be a lot higher, but it hadn't, and that I used the word that you don't often hear from someone in the financial arena, and I was wrong. Having said that, because where the metal prices are now and how much discounted the spread between shares and the metals themselves have become, it made me feel that I had to state what you quoted, and that was that they have become extremely attractive. And in an allocation where I only suggested no more between 10 to 20%, I raised that allocation to the upper end to 40% for the most risk-oriented speculative person. And that was a big step. That's a number that I don't ever recall having or suggesting that much exposure to one sector, and in this case, mining and exploration stocks. So as of this morning, before the market opened, I felt, at least going forward, that I would be bold enough to make this stand and say that they have indeed become the most compelling. Now, that's coming from a man that also felt they were pretty compelling these last few years, but like you said, have not lived up to really any of the hope or hype or whatever you want to call it that many of us gave over these last few years. But it's come to the point now where everything that I look at, everything knowing what's happening in the industry, it's part how I make my livelihood working, particularly on the junior end of companies, that it appears that the markets have made them compelling speculations. But I do want to make this point. The word speculation is really a word that Wall Street created, so it wouldn't have to say gambling. And that gambling and speculating are both the same thing. And when one gambles or speculates, you have to be prepared to lose part or all your capital. And if you are, then they are very compelling.
As you mentioned, you were featured speaker this weekend at GATA's Gold Rush 2011 conference in London. How was the conference, and does anything in particular stand out that you'd like to share with us?
Well, with no disrespect to all the other conference groups that I have spoken at and will speak at in the future, I don't remember a more insightful conference than the one I took. It might have been because it was all speakers. I don't think any public company spoke that I remember being on the program. They might have, but I might have not been in that short period of time. And the people that did speak did not have a presentation that was basically geared to get people interested in what they did, but was really just an educational, insightful type of presentations. And whether it was Jim Sinclair or Eric Sprout or some others, or even Andrew McGuire, the gentleman who blew the whistle on the silver manipulation, when Peter Grandich is sitting at a seat and staying in a conference room and listening to speakers, versus when I normally walk away a lot of times if I'm not the MC, because I find many of the speakers at conferences are just making some sort of sale pitches. I thought the GATA conference was clearly, no other one I ever attended was better. And I think what also came out of the conference, there were people from, I think, 31 different countries. It was very insightfulness to hear what the attendees had to say. I guess because there was a fairly large sum to attend the conference, people came there were very serious oriented about that investment area, and they were very knowledgeable. I think it was the most knowledgeable group of people, of attendees, that I ever met.
I really wish I had made it.
Well, I believe they videotaped it, and there will be a videotape. I guess GATA would be selling. I would check with GATA, if I know GATA, they won't charge a lot. But I will certainly be telling my readers when that video comes that they should buy it, because, like I said, after so many years and emceeing a lot of these different conferences, there's not that much that takes me back and make me go, wow, that was really worth hearing. But that was basically what I kept saying to myself for almost 2 days. We're
definitely going to have to get that when it comes out on DVD. Tell us about your newsletter, the Grandich Letter, and how listeners can subscribe to it.
Well, it's free. It's a blog. Like I said earlier, part of my livelihood is working for junior exploration companies on the corporate development and public relations side. But no one has to do anything with any company in order to get and see what I think about the markets. It's posted on the blog. They can, if they so choose, can provide an email where they can get an email alert at the end of the night that will send our last 5 posts to the blog. But there's nothing they have to purchase or provide in order to get it. And separate from that, I have a business in the state of New Jersey that's Christian-oriented and helps mostly professional athletes in areas of insurance and estate planning. And that's basically what I do for a livelihood.
Peter Grandich, Grandich.com. Thank you for being on GoldFiend.com.
Thank you, and best wishes for great success with your new site. Great success with your new site.